Today is November the 7th. This is the Budget and Finance Committee for the Recreation Centers at Sun City West. My name is Dick Rhodes. I'm the chairman of the committee. It's 9 a.m. and I'm going to call this meeting to order. So if you would please stand for a pledge of allegiance. Okay, we have a quorum. We do have one member who is an excused absence. So we're going to proceed. We do have an amendment from the minutes of October the 24th. We have an amendment for the meeting of October 24th, and there are three editorial amendments. We have one omission on paragraph in section 305. We inadvertently omitted Terry West as part of the working group. On the second paragraph on 305, we duplicated the term cost of living, so we deleted that. And then on section 306, paragraph 306, the very last paragraph, somehow, Frank Bagnato became Frank Bosak, and so we changed that, and I don't think they're related, but we'll just leave that for another day. So we did change that to Frank Bosak, committee member Frank Bosak. Okay, so unless I hear anything else, we're going to approve the minutes. Thank you. We're going to proceed directly into the agenda. Our first item on the agenda is CapTrust, and this is their Q3 reserve fund performance presentation. And I'd like to introduce Mr. Nathan Erickson and Carol Romney from CapTrust. So if you would... It's yours there.
All right. Good morning, everyone. I'll cover a few market commentary slides, and then Carol will cover performance and a review of some other material. So just to set the stage as we talk about performance this quarter, we have broad market indexes up on here. You can see on the far right, U.S. large cap stocks up 13% for the year, but these shaded bars represent the third quarter, and generally you can see it was a tough third quarter for all asset classes. The Reserve Center doesn't have a lot in equities, only 10%, so these far right numbers don't matter as much. The U.S. bond market did move negative in the third quarter. It was down 3.2%, and at the end of September 30th, down 1.2% for the year. Now that's the index, that's not necessarily your performance, but just to give you a sense of where markets are at. Part of the reason the bond market has been challenged is the move in the 10-year Treasury. You can see a year ago was 383, currently at 4.6. It moved up even more in October, but now it's back down about that same level here as we sit today. So I'll talk a little bit more about this, but markets remain challenged, and even the S&P, which up 13% looks good. If you look at the index on an equal weighted basis, I won't go into too much detail, but the way the S&P works is that the biggest companies represent the biggest percentage of the index, and it's really being driven by 7 stocks. NVIDIA, Microsoft, Facebook, those 7 stocks are driving the market. If you were to equal weight all of them, the market's only up about 2%. Same effect occurred in 2022 when the market was down 18%. If you equal weighted it, it was actually only down 6%. So we've got a really top heavy stock market controlled by 7 or 8 technology stocks. You take that out, it's a below average year from an overall standpoint. The bond market, as I mentioned, a tough third quarter and currently sits down about 1.2% on a year-to-date basis. This chart shows each line is one calendar year going back to 1976. So you can see generally the market is positive. The bond market is positive. Lots of squiggly lines ending up above zero. This one here is last year, 2022, by far the worst year in the history of the index. And while historically you'd expect a material bounce back after a tough year, this year, we're not quite getting that at this point. And again, that's because rates have moved a little bit higher still. And I'll talk a little bit more about what we see looking forward. This chart tracks the federal funds rate. So you might hear about the Fed and the overnight rate, Fed raising rates. That's this line. So why 2022 was so bad is because we went from basically 0 to 5.25, 5.5 in the course of about 6 to 8 months. And you can see that trajectory is steeper than we've seen in the past, steeper and higher. We don't expect rates to stay up there forever. In fact, this blue dotted line is what the Federal Reserve is saying the path of their interest rate levels will be. So sometime over the next couple of years, you should see that number come down. The green line is what the market, so the market actually prices in their expectation of interest rates, and they're pretty close to the same. And long term, the Fed wants to be here, 2.5%. So while we've suffered through a high interest rate environment and that's impacted markets and portfolios, we don't expect it to last forever. What will drive this change is a lot of data points that we hear about on a regular basis, things that are coming out every day. So part of why the market rallied last week and the interest rates were down last week is because new job creation was lower than expected. The economy is showing signs of slowing. If inflation continues to slow down, those are all things to where the expectation would be the Fed is not going to raise rates beyond this point, and they don't want to push the economy into recession necessarily, so at some point they will loosen monetary policy and decrease rates. So I don't have a timetable on that, but it's inevitable. It will happen at some point. I'll just cover some economic headwinds and tailwinds. We like to do this on a quarterly basis from a headwind standpoint. There continue to be conflicting economic signals. So while job creation was lower last week, inflation remains kind of sticky at about 3.7%. We had a really high GDP number year over year for the third quarter. I think it was 4.3 or 4.5%. So you've got some signs saying things are slowing, other signs saying things are not slowing. So that creates headwinds because it's hard to know what direction the Fed is going to head if you don't have clarity among those signs. Some challenges with consumers. In the data, you're seeing a lot of people now who may have spent all of the stimulus money they got from COVID, and now they're moving towards spending on credit. So the main data point there is credit card balances are increasing, and that's concerning because that's not an endless supply of funds. So at some point, people's spending will slow if they don't have savings and they're using credit. And this rising deficit is a problem as well. So I think the annual deficit right now sits around $2 trillion, extremely high. Oh, sorry. And it's going to compound by the fact that about a third of outstanding U.S. Treasury debt has to refinance in this next year. So you're going to have a third of government debt that the government is paying 2 or 3% interest on, have to be refinanced at current interest rates, which are in the 4 or 5%. And because we don't have a balanced budget, because we are in a deficit, that increased interest cost will also have to be financed. So they will have to issue additional debt to pay the interest on the debt that they're issuing. So bit of a tongue twister, but that creates some concerns. The market is not excited about that. From a tailwind standpoint, we've been hearing about recession for a couple of years and it hasn't happened. And so now the expectation is maybe we'll get this, what's been called the soft landing. We won't actually enter recession, but the economy will slow and we'll just get back to normal. Consumer strength. So I mentioned the challenges with deficit spending, but they are still spending and there is still wage growth in the economy. So people are seeing raises in their income, and stability in the job market. And then this idea of potentially increasing productivity from artificial intelligence. So part of the reason you've got these 7 stocks that are doing so well is because of this belief that artificial intelligence will have a material impact on productivity. So, you'll continue to hear about that. I don't know if that's something that has an impact in the next quarter or 2 or 3. I think it's probably a multi-year thing, but there is a belief that the more you can leverage artificial intelligence, the more productive businesses can become, the higher profit margins, and ultimately that's good for the overall economy. So I'll stop there before I turn it over to Carol. Any questions from a market or economic standpoint? Or I can wait till the end.
I think we'd probably want to wait until you're
Sounds good.
completed.
Good morning. Okay, so I will cover a portfolio review, and then I've also been asked to validate some of the provisions in FI12, which is a document your organization has. We are mandated by an investment policy statement that we have drafted that includes many of these provisions with FI12, as well as some other provisions that help us as advisors manage and advise on the portfolio. Reporting is a little different from 1 year ago when we were here in October. So a little bit different reporting might look different, but same great service, and the portfolio is still being managed seamlessly. So just a little bit different reporting if you compare this to your report from October. Inception date, October 2021. We started out with almost $8 million. Since then, net contributions, the contributions in and out by your organization, by this in this portfolio is $423,000. That will include a contribution that took place end of 2022 of $3.2 million, and this year we have taken out a total of about $4.8 million. More on that in a bit. Since inception, net investment return minus $3 million. And I know this is giving a lot of heartache, so I'm going to cover how the portfolio was designed in FI12, how we manage it, given that the provisions in FI12, as well as the investment policy statement, and hopefully that will help ease some of the concerns, okay? One thing I want to point out is that in the investment policy statement, we manage the portfolio over a market cycle, which we consider to be about 3 to 5 years. That's specified in there. Since this portfolio, the inception of the portfolio, we are 2 years into that, okay? Current year to date, we are positive with investment returns, ending market value of $26 million and some change. This is as of end of September, and I just looked at the portfolio and we're up a little bit more since then. This page here is just going to illustrate that we are following the 90% fixed income, 10% equity. Furthermore, this breaks out our equity component between total U.S. equities, total international equities, and you can see historically how the portfolio has been managed, and we're right on top of those benchmarks. This page is going to illustrate that there is nothing that is above the 20% target that we are mandated to manage towards. The IPS as well as FI12 has a 20% limit in any single security, and we are under that. Performance. Since inception, we are down 5.25%. That is coming out of a very brutal, ugly 2022, where there really was nowhere to hide. I think, Nathan, we've come in with many charts and graphs showing how unusual it was for interest rates to go up as high and fast as they did, completely explainable. When interest rates go up, the principal will go down on fixed income securities. But what you don't see yet, and why we need to let this play out over a market cycle, is that yields are increasing. Fixed income is actually a very helpful component of our portfolios now, which we haven't seen over the last 10 years, where we really couldn't get any yield on our fixed income. So we need to let this play out. Benchmark down 6.65%. We have a page in here that spells out exactly what that benchmark is, which is the bond aggregate, Russell 3000 for equities, and then the All World Country Index, which is a broad-based index minus US stocks, and we weight that and use that as the benchmark. So that's in this as well. Since inception, we are beating the benchmark. Over 1 year, we are beating the benchmark, as well as current year to date. We are actually positive. This is a 90% fixed income portfolio. Nathan had just shown the market where we're actually negative fixed income right now because the yield curve is, the longer end is going up, and that's putting pressures on. Our performance is completely explainable, and I'll get into that in just a moment, how we are beating that benchmark. 4.8 million was taken out of this portfolio and set aside, reserved. This is just the history of those monies coming out, working with your committee, giving us directives on setting aside monies as the budget comes in, and those budgetary needs are validated. We are managing this. We're not getting paid on it, but we are making sure that you're getting as much as we could possibly provide, given security with this. So we're using a cash-like instrument, and it is up 70% as of October 25th, probably up a little bit more because I think we had a dividend come in since then. 70,000. My apologies. Yes. Sorry. We can't do that. We can do a lot of things, but I won't go into all these numbers. Feel free to ask any questions if you want to. I'll just touch on the main highlights. This just breaks down the individual securities against benchmarks. We don't hold a lot of cash in the portfolio. Cash would underperform our benchmark because our benchmark is a T-bill 1 to 3 months, which is yielding pretty good. The actual cash allocation in the brokerage account right now doesn't yield as much. We're not concerned about that. Your 90% fixed income. This is how we're beating the benchmark. When interest rates are going up, we tilted lower duration. We tilted to securities that had less sensitivity to interest rates. And I will show you another graph here in a moment. At some point, that will be reversed. 10% equities. We have our US equities here, and then our international equities on the following page. And that will bring the total portfolio, as we looked at these performance earlier, since inception, we're down 5.25. Total portfolio benchmark, negative 6.65%. Page 20 is the explanation on the benchmark. We have a few pages in here. All these green circles, you have a portfolio made of passive securities. So we're basically just making sure that these investment managers are tracking towards the index. We look at something called a tracking error. We look at their securities lending policies. Everything is in good standing with the individual securities. Portfolio characteristics. I'm going to stop on this just for a minute because the FI12 lays out a strategy to meet your objectives, and part of the strategy is embedded within this page. Duration is a statistic that we use to measure the sensitivity of interest rates to a portfolio. FI12, you'll see in a moment, lays out a strategy of diversifying those securities that have various interest rate sensitivity. You can see on here, we have almost -1 all the way up to 8.54. So yes, we are diversified with sensitivities within the portfolio to interest rates. All of these instruments here are ETFs and mutual funds that are liquid within a day. Additionally, I'll just point out the expense ratio, 5 basis points. This is a very inexpensive portfolio. Duration as of September 30th for the portfolio was 4.66. In October of last year, it was just under 5. And as I'd mentioned, we tilted a little bit lower duration, which has helped us to outperform the benchmark. 1 year ago, the SEC yield of the portfolio was under 4%. And here you can see the beauty of higher interest rates. We know it's painful. We know there's that $3 million loss that you see, but it is starting to yield higher and higher yield on the portfolio. We need to let this play out over a market cycle. Review of FY12. Goals and objectives. The specific goals shall target preservation of capital, liquidity, rate of return, in that order. I'm going to spell out how we are meeting this given the directives within FY12, which translates into the investment policy statement, which is how we manage the portfolio. Let's focus on preservation of capital to start. Your portfolio is 90% fixed income, 10% equity. This chart is just illustrating since 1950 to 2022. If you took $1 and put it in the stock market or bond market, any of those years in between there, you could have expected 1 year later for that dollar to either be up 47% or down 39%. A bond, if you stuck it in the fixed income or bond component of the market, you could have expected 1 year later for it to be up 43% or down 13%. Not a big surprise. We know stocks are much more volatile than fixed income or bonds. And your portfolio is 90% fixed income. Over 5 years, if you put $1 in and held it for 5 years, historically speaking, during that time, your stocks would have only been down 3%, bonds would have only been down 2%, and on a mixed 50-50, you wouldn't have been down at all. We are managing this over a market cycle 3 to 5 years. Historically speaking, this portfolio is built to preserve. Continuing on, preservation of capital, foremost objective. We talked about that. Additionally, it lays out the strategy by which it's going to meet those objectives on the first page. Credit risk, minimize credit risk by limiting investment activities to the type of securities detailed in the investment policy. More on that in a moment. Interest rate risk, diversify its portfolio with approved securities that have differing impact levels of interest rate fluctuation. I illustrated that on the portfolio characteristic page. Market risk, provide broad diversification by investing into multiple asset classes within specific investment parameters. That is also on the holdings page that shows that we are meeting those strategies. Liquidity. Investment shall be made on cash flow requirements. Since all cash demands cannot be anticipated, portfolio shall include securities easily redeemable or sold in the secondary market. And yes, they are all mutual funds and ETFs that are liquid. There are no alternatives or nothing in here that is illiquid. Rate of return shall address capital needs, operating costs, inflation. The first two you would want to refer to your committee, the budgeting committee. I am going to talk about inflation for just a moment, and let's just look at historical inflation. Hate to date you all in here, but I think some of you probably remember double-digit prime rate, double-digit mortgage rates in the 70s. It's kind of funny to think we have high interest rates today. We have had very low interest rates and very low inflation for a long time. And yes, we do have higher inflation now. The Federal Reserve will increase interest rates to try and combat that inflation. I bring this up because if you were just in a very safe security, if you said we don't want to lose a dime ever, every year we want to have preserve our capital 100% with no risk, we could find securities out there that might barely keep up with inflation. On a short term, it wouldn't be super coordinated, but over a long period of time, it may. The problem with that is you will not get any real return. Any costs above and beyond inflation would have to be passed on to residents. Your portfolio is built to have some real return. We do all of the securities that are exposed in this portfolio are investment grade or higher, which means that we do have U.S. government exposure, but we also have some credit exposure as well that gives us a little bit higher return to help generate real returns above and beyond inflation. Investment of funds shall be guided by cash flow requirements. Again, for those cash flow and operating funds, communicate with your committee on that. Reserve funds for capital expenditures may be invested based on specific annual liquidity needs. by using instruments backed by full faith of the government, check. Open-ended, actively managed mutual funds, ETFs, check. High credit investment grade quality, check. Domestic and international stocks, check. No individual shall exceed 20%, check. No investments are to be purchased on margin. They are not being purchased on margin. Funds shall be invested in a range of fixed income equities with equities not exceeding 10%, check. Investment and cash management performed by CFO, again, refer to your committee on those obligations. Investment of capital project reserve funds shall be managed by a professional investment advisory firm, which is CapTrust. The advisory firm shall report portfolio performance quarterly to the CFO. We also provide a monthly statement as well. And budget and finance committee. Documents, picking us, judging us, all those things that go along with selecting and monitoring your investment advisor. You'd want to just refer to your investment committee. It does talk about investment costs, and I did want to point out again that you have a very, very low portfolio of 5 basis points expense ratio. Selection criteria, your committee went through that when they chose us. Investment advisory firm candidates shall be fee-based. We are fee-based, not paid with commissions. We do not receive commissions. Our fee is 40 basis points up to 10 million, 10 basis points above 10 million. Proper and current certifications, everything is disclosed about us. Our firm happens to have, and specifically the Phoenix office, not only do we have all the licenses that are required, but there also are some designations that are meaningful for institution portfolios, and you'll see that our advisors have those as well. We have a very strong code of ethics. And the last 2 bullet points here, you would just refer to your committee and the investment policy statement. We went over that in a previous presentation. Performance management reporting, refer to your committee on that. Internal controls, refer to your committee. All investments shall be held in banks and brokerage firms. The ones that we are managing, yes, I can confirm that they are FDIC for bank monies and SIPC for securities. And that's it. I'm very optimistic. A 90% fixed income portfolio going forward. I think we need to let this play out. I'm very optimistic. I see higher yields out there, higher cash flows. Your portfolio is doing exactly what it was designed to do. Nobody knew 2022 was going to happen. It's very painful in the short run, but over a long run, we'll see higher returns coming in with these higher interest rates. And with that, I think we'll take questions.
Do you have another section of this, or is that all of your total? Okay. So what we'll do now is I'm going to ask the committee if they have any questions or comments that they wish to offer. Ms. Novello.
I'm going to start, and then, but one of the big questions, Mr. Chair, I don't understand what refer to committee means. We do not actively sit here day after day managing this portfolio. What does that mean?
Okay, so portions of FI12 are within our control and portions are not. So in terms of monitoring conflicts of interest,
of course,
those would be managed by the committee. In terms of the system of internal controls, CFO shall establish a system of internal controls. That's outside of our purview. We're just trying to illustrate what applies to us and what applies to the committee.
So really, by that statement, does that mean you're guided by the policy, not by us on a day-to-day basis?
Correct.
Thank you. So you're not referring it to the committee, you're just guiding it by the policy that we've established.
We are following the policy, but not all of the policy applies to us as the advisor. Some of it applies.
Understood.
Yeah.
Thank you. That satisfies that question. Thanks.
Mr. Bernardo.
Thank you, Dick. Nathan, earlier, it goes back to your slide 9, but we don't have to go back to that slide. You indicated that gross domestic product is up quite a bit. I think it was 4.6% in the last quarter.
Correct.
How much of that is being driven by the multi-trillion-dollar government spending programs that have been introduced over the past few years, where they magically take zero and turn it into something?
So without a doubt, the stimulus coming out of COVID had a material impact on the swift recovery of the U.S. economy and the continued strength of the U.S. economy. So, the deficits that were created, the stimulus provided, absolutely has had an impact on growth levels. That's part of the conflicting economic signals is, what point do we look at the data and realize this is normal day to day? And what point, are we past the impact of that stimulus? And it's hard to tell.
How much of that stimulus do you think is contributing to higher than, hopefully, inflation? I mean, we're higher than we'd like to be. You can't eliminate it completely. That's a big problem.
So key drivers of inflation getting as high as it did, up to 10%, was the amount of government stimulus that was provided. The fact that you had some supply chain issues with COVID where you couldn't transport goods in a timely manner. And then you had demand slow dramatically. People were locked in their homes, unable to do anything. And once they were able to come back into the marketplace, they spent that excess savings that they had. So you had a big demand shift down and then back up. All of that contributed to inflation. And I think part of the reason the Fed moved as quickly as they did is that they didn't anticipate all those factors contributing in advance.
Next is for Carol. Carol, since you are more of the risk in the investment side of your presentation, which is outstanding. I can't imagine how many hours you put into putting it together. In my opinion, and I have the background to make statements like these, it's virtually impossible, even if you took every bit of money you had and bought gold bars with it and stuck it under your bed, there's still risk involved. And so my opinion is that no matter what you do, you cannot eliminate risk completely, no matter which way you go. And a 90-10 portfolio such as we have is probably about as conservative as it gets. But again, there's just simply no way, in my mind, to totally eliminate risk, because there's always something in there that will affect your investments. What is your opinion about what I just said?
Yes, that is true. There is always some risk, and it's our job to understand the risks and also to understand your objectives of what you're trying to do, and to understand your time horizon, your liquidity needs, and to make sure that the portfolio is built to be able to meet those objectives. Again, if you needed every dollar tomorrow, even a 90-10 portfolio probably would not be suitable. The objectives laid out in this are being managed towards.
Thank you.
I'll just add one piece to that. So in 2021, when we started managing this portfolio, had you put everything in cash at that point, the return would have been 0%. And one of the risks that is addressed in FY12 is that of inflation and costs. So if you're earning 0%, you're bearing the risk of inflation. Yes, you've protected your principal completely, but as Carol pointed out, if the portfolio isn't bearing that risk, it's likely the members of Sun City West will have to through increased contributions on an annual basis.
Mr. Bosak?
I think we've touched on this in previous sessions, but maybe for the benefit of everybody here, it's clear that you have confidence in the long-term cycle, and that's the way the portfolio was built. I'm just curious how often you review your whoever does that in your organization. What kind of conversations take place, what the result of those might be, and what kind of recommendations would come out of them if it ever came to where you would recommend to us changes in the portfolio.
So a couple of points there. One, we operate within the boundaries of the investment policy statement of FY12. So we may come to you at some point and say, given your objectives, we think the target asset allocation needs to change, but we can't do that on our own. We can just say to you, for instance, if we're in a challenging bond market again, we may say to beat inflation and cover costs, you need to be a little bit more aggressive. Within that policy, we do have discretion. We are discretionary advisors, and we have a team of 100 people in Raleigh, North Carolina that work on our investment portfolio for the benefit of our entire client base almost on a daily basis. There are weekly calls, there's monthly calls with the entire firm. I can tell you that some changes have been made just last week related to where interest rates are to increase duration, because there's a belief that we're probably at the top in terms of yields. So changes are being made within the policy. We can do that at our discretion. Anything outside of the policy, we would have to collaborate with the committee.
Christine?
Thanks for letting me have a second question. There's so many that we could ask, but you really, as my colleague Frank said, you really did a great job on the presentation. It's pretty clear to me. One of the things that's a construct within our policy that you are absolutely adherent to is the 20% allocation to any one vehicle or any one fund, right? If you were given the opportunity to advise us, are we gaining anything by, we want to make sure that we're not overly dependent in anything, but is there, we've asked this question as well before, is that constraint hurting us, helping us, or is it just sort of neutral at this point, in your opinion?
I mean, I would say it's neutral.
Okay.
Every position is a well-diversified security.
Right.
So in some cases, we may be getting the same exposure out of 2 securities instead of 1. It doesn't really matter.
Right.
So it's not a concern.
It almost harkens back again to what Mr. Bagnato had mentioned about having gold bars under the bed or something equivalent to that, although it was a metaphor. We get the idea, right? There's always going to be some risk, and we're just trying to diversify. So
Yep.
Thank you.
Dr. Miller?
You know, it's always interesting how gold comes up. But before the meeting, I was talking to someone and I said, oh yeah, so some people want to, have gold coins buried in their backyard. So I do congratulate you on the quality of your presentation. And I was very glad to hear that you're sticking with the long-term view. Everybody's got an investment history of what they've done over the course of their life. I can remember when I first started my investing career was in the mid-'80s, 86 to be precise. And gosh, guess what happened the year after that? Okay. I lost a lot of money. I got really scared. I moved it all out, put it in basically a money market, and I had it sit there for like 3 years. The consequence of that is I never made any of that money back. Okay, I learned a very valuable lesson there about staying the course with my investment policy. Subsequent to that, every time we had a major downturn in the market, I did absolutely nothing with my investment portfolio. If I had lost value, I made that money back and more past that. So, I know the community is very concerned about the loss of valuation. That's perfectly understandable. That's a very human emotional reaction to have. But I would encourage people to take the long-term view. I use the analogy of the fact that as people get closer to retirement and they get older, they want to have a very conservative investment portfolio, which is what we have now. I look at Sun City West not as excuse me for saying this, not as an old person. Okay, we are a vibrant middle-aged community, if you want to think of it that way, that has 3 generations we're currently serving now. And we've got future generations we will continue to serve in the next 50 years. So again, this whole thing is designed to be a long-term investment policy, not a short-term money market account. People need to not lose sight of that fact, that this is the long term. and that you guys have structured the portfolio, your investment policy is structured that way to meet our long-term needs, not our short-term needs. So anyway, thank you.
I have a couple questions. If you look at page 14 in portfolio review, and I just want clarity on this. I think I understand, but I want to make sure that you're telling me what I think I'm reading. That the benchmark for the portfolio was a negative 6.65
Yes, from the inception of the portfolio.
from the
correct.
exception.
And that's an annualized number, yeah.
Absolutely. And our actual performance is 5.25.
Correct.
Well, I'm going to say this, it's probably a little crude, but it's like, it hurts so much when, it'll feel good when you stop, because we have actually outperformed in a negative way the benchmark.
Correct.
Okay.
We like to say clients are all about relative returns on the way up. So when the market's up, they want to outperform, and absolute returns on the way down. So most people don't really care that you outperformed on the way down. It's still negative, but we have outperformed on the way down.
Well, I think that's good because historically, and first of all, our account is the most important. I don't care about your other,
Correct.
that ours is the most important. So you tell the people in Raleigh that we're the ones that you really
It is
want.
to us. So you get two sets of eyes. You get Raleigh and you get Phoenix.
Just wanted clarity on
Yes.
that. Okay. But there's retrospective and prospective. Back in October of 20, I read the document that was presented to the Budget and Finance Committee and the Governing Board. And basically what it was the justification go from 60-40 to 90-10. And they were looking at a prospective review or a prospective return. What they didn't know was the bond market was going to fall flat on its face the following year. But what they did know is that we can look in this when we change the profile from 60-40 to 90-10, we're actually safer when we do that. Because in any world, 90-10 is an asset preservation portfolio. So if we would have been able to compare the what ifs today at, say, 60-40, or as opposed to 90-10, I'm not sure how much deeper we would be in. I mean, there's an argument to say that the stock market, although it really dropped, it probably dropped twice the percentage that the bond market did. It has come back, but has it come back up to where it would have been? So they were looking at prospective, wise move. We're looking retrospectively as, oh boy, that wasn't such a good idea. But that's what we're living with.
Mm-hmm.
Or do we have, and it's not for this discussion today, but do we have a discussion, and you touched on it, and Gary touched on it, is should we look at changing our mix? Is that something we should do? I can't answer that question. I think right now we would say, let's stick the course. This is a 5-year cycle. Carol said this is a 5-year market cycle. We're 2 years into it. If we change it now, we're going to have to eat the unrealized loss, and we'll never make that up. We know that, to go into something else. And then that's pure speculative as well. So
Yeah.
that's really kind of my comments. I wanted the validation of the benchmark relative to our own performance. And basically what you told me is that we beat that probably about 1.4%.
Correct. Net of our fee.
Right.
So a couple of comments. As bad as the bond market was in 2022, the stock market was worse. So had you been in 60-40, you would have been worse off in that year. I'd have to go back and look to see if that's recovered on a comparable basis. It doesn't matter. We actually don't recommend second guessing decisions you've made, and you shouldn't change your asset allocation based on the market movement. Asset allocation should be based on your objectives, your risk tolerance, And if that changes, then yes, you can change the portfolio. But if you change it based on the market, you're going to chase returns, and historically that never works out. You end up following the best performing asset last year, which ends up being the worst performing asset the next year.
Well, I think the key points that we as a committee and as a community want to keep in mind, that in 2020 and 21, when this was actually conceived and incepted, they had the foresight to define the type of product that would be in the fixed income category. And it's very well defined. You've actually gone through considerable effort to demonstrate that to us. So to me, that was a very wise thing that was done. Can we look at it and prove it now? Probably, but that's not the discussion that we're having right now.
Yeah, we see hundreds of investment policy statements from all kinds of organizations. Whoever constructed FI12 did an excellent job. It's very comprehensive, very detailed. There's really little to improve from our perspective.
Thank you. So do we have any other questions from the committee? Because if not, I'm going to open. Oh, Mr. Bosak. Or now you know who wrote that.
We just
Mr.
stick an O on the end of his name, and then we'll all be paisans. This is on the same slide there, Nathan, slide 14. So you live in a world where somebody makes 20 basis points and they're ecstatic. And if I'm looking at this correctly, we beat the benchmark by 145 basis points, which is not exactly chopped liver. My question, and I think you answered it earlier, but if you could elaborate on it again, the benchmark, the total portfolio benchmark, what's in that benchmark?
Yep. So that consists of these positions. We benchmark cash to the 3-month T-bill, and we typically hold very little cash within the portfolio. We benchmark fixed income to the aggregate bond index, U.S. equities to the Russell 3000 index, international equities to the MSCI All Country World Index ex-US. And we blend that based on the target allocation of the portfolio. So it's basically 90% Barclays Ag, 10% the 2 equity indexes. And the idea behind that is, if you just invested in indexes, what would that give you? That's the benchmark. We use mostly index funds in the portfolio. So for us to have provided 140 base, I will not sit here and tell you that's going to be the level of outperformance on a long-term basis, because it's, as Carol pointed out, it's because we were shorter duration than the aggregate bond index. But generally, if you're using index funds tracking an index, you should see your return very close to that number.
Thank you.
We're going to open this up to the floor, and we are going to have the clock, because I think we have several people that will want to talk, is my expectation. So we will put you on a clock. So at this time, I want to open up to anyone in the audience that would like to comment. Okay, the couple reminders. Please put your name and your rec number on the card or on the log. And if you would direct your questions to me, okay, there will be a 2-minute clock, Bob.
And for those of you who are attending remotely and watching live by YouTube, we're monitoring that channel. Please include your rec card number with your comment or question. Thank you.
My name is Bob Campbell, 131996. I'll never do this in 2 minutes, but I'll try. Okay, on slide 8, could you throw slide 8 up? I'm going to jump right in on interest rate risk. The reason is, in September of 2021, the initial investments were made. You can see the 21 on there. September 21 is when the Fed funds rate was close to 0.
Correct.
Inflation at the time, your other graph, was over 5%. So we went all in with about a 2% at that time. I'm going to say the bond, our portfolio yield about 2% at that time, when inflation was 5%. Okay, next thing, on interest rate risk. We have 53%, we want to have 2.1.1.2. Approved securities that have different impact levels to interest rate fluctuations. We went 53% into intermediate bond funds with 6 to 8 year maturities. And we went 27% of the portfolio into short-term maturities, which was about 2.6 year maturity level. So we went all in on 2. To me, that's not a broad diversification. Okay. Market risk. If we would have had broad diversification, we fundamentally aren't in multiple asset classes. We're in bonds, 2 of them, 53%, 27%. And that other 10% we talk about, the 90%, that's in those term ETFs, 1.5 million each, December 23, December 24. I'd count that as like a money market fund or cash. Rate of return, like I say, if we're trying to hit rate of return, we went in trying to get a rate of return, our portfolio of about 2%, when inflation at the time was 5.4. I know I already said that, but so I don't understand to go all in at that time when inflation was 5. We weren't even close to meeting it. And
We're
the
at
final,
your time limit.
okay, one more second.
I'll give you one more minute.
Yeah, thanks.
Okay.
My question would be, we talk about burying gold in a backyard or going all in at 0% rates. Why not a bond ladder? Why would not a bond ladder be appropriate for a community like ours?
So,
Okay.
do you want me to address it?
Yeah, respond to that, and then we'll thank Mr. Campbell. And
Yeah. I think when you look at the holdings, which page are we going to here? Yeah. No, this is fine. So each of these positions holds thousands of securities underneath and effectively have laddered exposure within them. You're really distinguishing between holding individual bonds that you can see with different maturities and a portfolio of bonds that are just collected into a single security.
But the single security is a share price. That share price right like now is down between 3 and 4 million. Or a bond ladder, if you had a 10-rung bond ladder, we wouldn't lose any money without burying gold in the backyard.
I mean, that's technically not true. The bond ladder would be marked to the current market price. So the price that you see for the portfolio would reflect the current market.
And
now,
there
if you
would be,
hold to maturity, you recover all
that's
that.
right. It's like a certificate of deposit at a bank at the end of that term. And by the way, in September of 21, a certificate of deposit at a bank was 0.27% for a 5-year term CD. I don't think either one of you two would buy a 5-year CD with a 0.27 rate of return. You wouldn't recommend it to a client. You wouldn't do it. But that's what you did with our money. You went all in on that graph on page 8.
Well,
Thank
I
you.
think it was a mistake.
Thank you, Mr. Campbell. I appreciate that.
Excuse me, Mr. Chairman, can we answer that? That was a pretty inflammatory question. I think it deserves an answer.
Go ahead.
So we didn't go all in. We built a diversified portfolio. We didn't design the target allocation. We followed the allocation designed by FI12. So within that, we built a diversified allocation of exposure to various maturities, various credit risk within the portfolio of fixed income. I get looking back saying, you know, here's what the market looked like, and could we have predicted that rates were going to increase at the level they were? I mean, you talk about inflation at 5% at that moment. I mean, it's in one of our past presentations. The Federal Reserve was saying inflation is transitory. We don't anticipate it staying at this level. It's just due to the fact that people are coming out of COVID and spending. I mentioned the number of factors that contributed to inflation. Those were not predictable.
Thank you. I will have speak.
My name is Dennis Hansel, 111074. Recreation Centers of Sun City West Investment Policy FI 12 states that the preservation of capital is the foremost objective of the investment portfolio. Google defines preservation of capital as follows. Preservation of capital is a conservative investment strategy where the primary goal is to preserve capital and prevent loss in a portfolio. Capital preservation strategies necessitate investing in the safest short-term investments such as treasury bills and certificates of deposit. End of quote. Foremost is defined as most prominent in importance. The next section of our investment policy statement discusses potential investments that will achieve the policy objectives. Some of the investment options in the policy included investments that risk capital, which contradicted the primary policy objective of preserving capital. Prior to investing funds, CapTrust never pointed out the disparity between the primary objective of preserving capital and investment options that risk capital. CapTrust is a professional portfolio manager and had a duty to tell the association that the investment options listed in its policy contradicted the primary stated objective of preserving capital. CapTrust failed in its duty to discuss this disparity, and investments were made that violated our primary investment objective of preserving capital. The failure to make investments that were risk-averse has resulted in our capital not being preserved. As a result, our portfolio is millions of dollars underwater. Unlike individuals who have lost money in the market, our association has a policy designed to prevent the loss of capital, and the foremost policy objective was disregarded with the investments made. There are two other lesser policy goals of liquidity and rate of return. Claiming that these goals somehow altered the primary objective of preserving capital is a poor attempt to justify what was done. The policy was instituted to avoid risk, and that did not happen. Thank you. I would like the entirety of my remarks to be included in the minutes.
Do we have any objection from the committee for that? Okay, if you will submit them, we'll include them in the minutes. Thank you very much.
We have no comments yet online. I've asked the 17 people participating several times to submit any comments.
Good morning, Chairman, committee members, and representatives of CapTrust. CapTrust administers our investment portfolio in accordance with FI 12.
Mr. Elias, excuse me, a technicality, but if you would identify yourself.
Excuse me. Bruce Lees, 135-422. I'll start again. CapTrust administers our investment portfolio in accordance with FI 12. Based upon market conditions, inflation, and interest rates, do you, as our advisors, have a recommendation that could improve our returns if policy FI 12 were modified to allow for more risk-based investments or flexibility to adjust investments for higher yields?
Nate, could you answer that?
So again, based on the objectives of FI 12, the current portfolio we think is maximizing return, managing risk appropriately. I think the discussion around increased risk-based exposure would have to coincide with a discussion around the trade-offs of that, meaning you're going to have a lot more frequent scenarios where you have losses, unrealized losses. So I can't sit here and say, yes, if you add more equities, you will definitely get higher returns. I think over the long term, that is true, but there's a trade-off. In the short term, you will experience more risk. So there's not an easy answer to that question. If the objective of the organization of the Sun City West portfolio and the committee is to attain a level of return higher than is currently expected, we'd be happy to have that conversation. But I will caution again, it shouldn't be based on anything that's gone on in the market, solely on the objectives and risk tolerance.
Thank you. Yes, would you please identify yourself and your correct number?
Tim Hurley, 120454. Just a little history lesson here. Back before CapTrust was hired on, there was actually two working groups. One was to put together the criteria by which we would survey people And at the time, I think there was four or five people firms that came up and interviewed. CapTrust overwhelmingly was the winner of that thing. The other thing is, and I agree with you, FI 12 is well-written. It was written by another working group, and that was Lou Mancuso, John Holbach, and at the time, our CFO, Pete Finelli. So there's many hands that have touched this before, and I agree, it's a well-written policy, and I appreciate the fact that you guys have stuck to it. Thank you.
Are there any other comments? Christine, do we have anyone from the YouTube?
No comments online.
Okay. We do have one more.
Hi, Nick Turner, 131829. Just some observations, really. Since inception with CapTrust, from the charts that were shown on the bond market looks from then to about end September, October, it looks like the bond market's down about 16.5%. According to the report we were given today, our portfolio is only down 6%. Now, because our portfolio also, we've got monies going in, we've got monies going out continually over that period, the total value of the portfolio is down about 16%. So I would guess that somewhere between 6 and 16% is where we're going with the total portfolio. And if the total bond market is down 16.5%, then there's no reason to panic. There's concern. Let's watch it. Let's keep our eye on it. Let's determine whether we should be adjusting policies or not. But it looks to me like we're more or less where we would expect to be, given the way the market has performed. And so that's something we should probably be looking at. And as I've got 40 seconds left, I'd like to say just with inflation, what we saw from 2007 up until 2 years ago is that the government deficit, if that deficit is driven by tax cuts for richer people, doesn't drive inflation. If the deficit is driven by government spending, which is going into people's pockets, and those people are spending that money, then we can expect to see inflation. And so looking forward, and in terms of inflation expectations and the portfolio, we should look at where the deficit is coming from. Is it coming from spending? Is it coming from taxing? So that's something that we need to think about.
Thank you very much. Christine, did you have a comment?
I wanted to be clear for Nick that some of what you were just citing in terms of percentages might not be totally in sync. I'm not trying to be critical, but for anybody who is listening online or listening later, I just wanted to say, look at the presentation itself for the actual percentage numbers and so forth. And some of the reduction in our portfolio was a withdrawal.
Yes, yeah.
Okay.
No, it's not comparing apples to apples. But that's just my general sense of the way the portfolio value is going and the way the market is going and where we're invested, that it seems like what we know of how the market has performed, the values in the portfolio are going where you would expect them to go.
We have one more.
Jolene Piaskowski, 132268. So just to catch up, I watched last February's meeting when they were here. And in that meeting, they said something about a progressive or an active management. Can you explain that again to me? I mean, and I wasn't sure in that it was.
I think it's passive is what you're referring to.
Right.
It's a
I am sorry, passive or
management.
active?
I'm going to defer that to, I know the answer, but I'm going to defer it to Nate.
Yeah, so within the investment products that we use,
Mhm.
they are all passively managed. meaning they're tracking indexes within those products. But the portfolio is actively managed in terms of how we decide which products we're using. So it's not to say that we've built a portfolio and set it and forget it. We're really just implementing our views on how to invest at the lowest cost possible.
Okay, so then if we're active, who decides that? I mean, when you decide something needs to be changed or we have extra cash, who decides that?
Yeah, so we have, I mentioned a group of 100 people as part of the investment team
Correct.
in Raleigh. We've got Carol, myself in Phoenix. We collaborate on that. If there's additional cash in the portfolio above our target, that's invested based on our target allocation. So if markets have moved and we're underweight in a certain area, we'll add the cash there to get back to our target exposure.
Okay. Then my next question, and I don't know, Mr. Rhodes, if you can answer this. So Pete Finelli, he's supposed to be tracking our investments. Is that what he does? What does he do?
So what's the point of this?
Well, I'm just asking if they communicate with CapTrust or if CapTrust
I can assure
communicates
you
with them.
that our CFO office is deeply involved with communications with CapTrust.
Okay, I'm just
That's-
asking.
Thank you very much. Yep. Do we have others? I do want to make some comments before we close. I think one of the things that we've talked about here is an unrealized loss, that everyone's worried about the unrealized loss. And when we look at our reserve fund, there's one metric that we continue to focus on at literally every B&F meeting and every governing board is the percent of our FFB, a fully funded balance, okay? Right now our parameters for that are 40-70, 40 for the floor, 70 for the upper end. So that means that that's what we're funding or what we're ready to. We have resources for 40% of the items on the reserve side. Currently, our FFB is 49%. We're not even close to going into a red zone. We monitor that literally almost at every budget and finance committee. We'll talk about the FFB, or we know exactly where it is or what it's doing. In discussions with Cliff and others in the CFO's office, that is something that is deeply embedded in our conversations. So we're at 49%. You should have a high degree of comfort. We have a very solid financial basis right now. Our instructions to our professional investment advisory firm are very, very prescriptive. I've said this before, I'll say it again, and you've heard us say it over and over again in here today, that we have defined what type of product we want them to buy. We rely on their knowledge and skill and expertise to select that product, and they do it on a prospective basis, as you do your own investing on a prospective basis. Retrospective basis is easy. Everybody can look back and say, darn, I wish I'd have done that. But in 2021, when we went from 90-20 or 90-10, their idea was very good. It was very solid. Prospectively, it looked pretty good. It didn't turn out that way. And I wish I could change it. And I know you wish you could change it. We can't. We're living with what we've got, and we are moving forward. So at that, thank you very much. As always, you have done a superb job, and I appreciate the entire committee and the community appreciates your focus, your attention, and your professionalism. Okay, thank you very much.
Thank you.
The next item on our agenda, No. Wouldn't, not yet. The next item on our agenda is item 3.02, and we're required by FI12 to review the performance of CapTrust relative to their adherence to our policy. And if you haven't, you heard Nate and Carol talk about the policy. They basically took our policy and went line by line item through it and demonstrated where they comply. So the job of the committee right now, and this will be a committee decision, and it's not, it won't be complicated. This is going to be a yes or a no decision that we make here. And the question that we have that's faced for us, and we have to make this declaration annually to the governing board, does our finance, our investment advisory firm comply with the provisions of FI12? And I'll open that up for discussion right now. Christine?
I'll start. I'm satisfied. We have a lot. I'm sure that I'm not the only one who has a lot of questions and so forth. But you know, I've heard the presentation. I've read the report. I've done my research, and I'm satisfied that CapTrust is in compliance with FI12.
Mr. Bernardo?
I think it should also be noted that Nathan and Carol, the representatives from CapTrust, have been taking care of our business now, I think, since inception. Unlike perhaps with another firm where we might have been shuttled around to different representatives. And so we have a history with working very closely, and I'm quite confident that they have a clear understanding of what this community needs to do with its money. And so again, just like Christine just said, I concur. They've done a great job, and we will continue to use them.
Okay, do we have any comments from the audience?
Dennis Hansel, 111074. I don't know that Nathan and Carol are our representatives from the firm. They do come and make presentations. Secondly, to say they've complied with the mandates of policy FI12 refuses to acknowledge the meaning of words. Define preservation of capital, define foremost. There's a stop sign. They, as well as the board, the Budget and Finance Committee, the CFO, and the general manager has failed to recognize that. So for that reason, I would not contemplate rehiring them for the next term. Thank you.
Thank you. We have anyone online for a comment, Christine?
There are no comments online at this time.
I think I'm going to go ahead and we need to get a consensus that we will forward this to the governing board, and I'd like to do it individually. Ms. Kellis, I'll start with you. Oh,
I'm sorry. That's okay.
I didn't see that.
I just want to clarify, Chairman Rhodes, that today we're certifying that CapTrust has complied with FI12. Full stop. Am I correct? We're not certifying or rehiring. We're not extending or extending a contract. Thank you.
Thank you. Okay, so the question is, do we believe that CapTrust is in compliance with policy FI12?
Yes.
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 Dwayne Parsons says yes.
And I'm sorry, I didn't know you were online.
Yes, I've been online the whole meeting.
Oh, okay, okay. So we have a unanimous consensus, and that will reflect accordingly, and will be forwarded to the governing board. Next, Mr. Swan, you have a revision to our independent audit report.
Thank you, Director Rhodes. Good morning, everyone. Yes, so we had a presentation from CLA last B&F meeting, and we certified their audit documents. However, Mr. Bozako, also known as Mr. Bagnato, pointed out the fact that the asset allocation was not correct on page 14 of the financial report. So on page 14 here, we've got the corrected page 14, and the two, there were two investments. There's an ETF bond index and then a treasury fund, which is the fund we put the liquidation into to position ourselves for the cash draw this year. And those were mistakenly put in the equity section instead of the fixed income section. So CLA recognized that, and they changed the reporting to reflect the correct asset allocation. And so what we're doing today is to certify the report after the correction.
Cliff, I want to make a clarifying point. And I know the answer to this, but I want you to tell me, did CLA make any change in their recommendation after they discovered this, should we call it accounting misadventure?
No, it was really a summarization error in their report.
Okay.
So yeah, there's no recommended changes. It's just a correction in their their summary. That's all.
Okay, thank you.
Not our.
Do we have discussion in the committee? Do we have discussion in the, do we have any comments on? No, okay. So we need to forward this to the governing board. So we need to get consensus that we want to accept and forward the revised report from CLA that will account for the accounting error. Okay, we'll start with Mr. Bagnato.
Yes.
Steve?
This is not an accounting error. It's a revised report, as I understand it, so yes.
Yeah, so we'll change the wording on the consensus to that. Thank you for pointing that out. Okay, Mr. Davis?
Yes.
Mr.
Yes.
Miller? Mr. Bosak?
Yes.
Yes.
Okay, it's unanimous, and so we'll forward it to the governing board accordingly. We have two policy statements that are under review. FI, oh, I'm sorry, yes, capital, I missed one. Carl, that's a.
Good morning, I'm
yeah.
here.
Carl Wilhelm, thank you. We've been looking forward to this, in all sincerity. So, Carl?
Very good. Well, thank you for having me this morning. This is the November and final review of the proposed capital improvement projects. And when I say final, November is the last opportunity that all committees have an opportunity to ask questions after I've given my comments about changes. The expectation is after today that this committee and the other committees that'll be hearing this same report this week will give their recommendations to the governing board on whether accepting it in whole, any items that they might have comments or not want to move forward. But per the project planning process, this is the last time that this is the proposed capital list, and it will become the general manager's capital list December 1st. So moving forward and sticking with the last 2 months program of giving you review, you'll see the three major sections of this proposed capital list is new items in tan,
blue and green items are directly from the reserve study tool for all departments and golf. And then the final category is allowances. I will answer any questions that you might have today, but today I will just review the things that have changed from October to November. We've had an increase in expectation of cost to move forward with the library expansion, renovation, design, architecture, and documents based on the information that we received from the concept presentation. And we are asking for an additional $30,000 to make that $100,000 for moving forward with design and architectural documents so that we have the information that we need for future year planning. Best costing in whatever year that might be determined. Moving on, we've had a change from our properties committee tours. We did the Palm Ridge tours a few weeks ago, and it was recognized that the issues we're having with men's and women's bathrooms and the old original partitions in those bathrooms do not provide us a measure of security for our paper products. So it was recommended to include this line item in the budget to have the partitions replaced with the appropriate hardware so that we can secure all of our paper products. And you'll see that it's divided in two categories because as an asset, one is in the activities building and one is in the fitness building. So there's more bathrooms in the activities building, 20,000. And in the swim and fitness building, there's less bathrooms, so 10,000 for partition replacement. And the side effects of that is, our partitions are old. They're in really good shape, unfortunately, but it would carry into, also urinal partitions to keep the colors and product in alignment for the whole entire restroom atmosphere. So those are the only changes in the new categories. Moving down to repair and replacement items directly from the reserve study tool. I am happy to say that I made comments before that I was in interview with a new fencing company working through General Acrylics, our vendor that did most of the major improvements at the Coons softball field. And we've had a very major reduction in cost. You will see $261,852 has been reduced from the original $756,852. This difference, documents in my possession, are the direct result of two different fence companies providing information over the last 4 years. So Adams Fence was our original information provided. They are no longer in business. Biddle and Brown is the new vendor that has been provided to me to work with, and their costs were considerably lower. This price of $495 does have a strong factor for contingency of cost of removing the warning track for fence replacement activities and work and the crane that would need to get in there to do this project. So the vendor came in the high 300s, and we have left it at $495 for the other unknowns for next year. Moving on, Silvercraft remodel millwork and countertops. We did also the properties tour there. We had very strong conversations, provided them the full layout of what was expected in the scope of work from the club in cabinet and countertop remodeling, and we are asking for an additional $50,000, making that go from $325 to $375. And I will always remind you that there are two other components of a lesser cost, which is the ceiling replacement of $20,000 and the flooring replacement of $23,000. To make that project a little bit over $425. So just want to be transparent there. Moving on down, we have the cardio equipment at Palm Ridge. We did get information from vendors that pricing on that equipment has gone up. So we've increased that a number by $29,208, asking for $159,000 to be placed in the budget. Moving on down to the softball outfield electronic fence and scoreboard. The club respectfully has not provided any additional help or information on, and it is possible maybe that they've even made some corrections to their scoreboard. So that is being deleted from the budget. So you'll see a reduction of $75,000 being asked. Moving on to Palm Ridge, I already commented about the cardio equipment. So over the last few weeks, Russ Facilities Maintenance received documents from our current our strength equipment provider that they are no longer making the parts and pieces to keep that equipment active. The strength equipment is based on the reserve study tool for approximately a 20-year useful life, where our cardio equipment is on a 5-year useful life. We have made a determination that the strength equipment should be put into the budget for replacement and do both at the same time. There are no longer any available parts for the welded components of that equipment. The only thing that we would be able to do to maintain would be like basic pulleys and pieces that we've either secured through our vendors' warranty program or things that we have in stock. So we are adding strength equipment to the budget for $63,954. Moving on down, lawn bowling benches. There is an agenda line item in the Properties Committee that will be discussed this week. The reduction down $30,000 to $30,423 is due to the fact that it was recognized the existing plastic furniture benches are in really poor condition. They are not unsafe. They do not have to be immediately removed. But from that discussion, it was recognized that the club was not asking for all 96 benches to be replaced, but only 48. They are happy to let the useful life of the existing metal benches that exist there stay and replace in a future year. The question that will come from the Properties Committee is whether or not that this should be purchased in this fiscal year from savings or allowances, and or leave it in the budget for next year. And the only comments that I have to that is you probably save a few dollars if you bought it now versus inflation of next year. And our savings has been bolstered due to good savings from completed projects, and we are virtually completed with the majority of our projects for the year, so that's going to stand strong. So if that helps in any recommendation or decision-making to make that purchase earlier than or leaving it in this conversation, I leave that in your hands. The Kuntz Craft Rooms 3, 4, and 5 Leather Room, again, Properties walked the facilities. The original request was Craft Rooms 3, 4, and 5. We've all discovered that the Leather Room and Art Room has the same chairs, and the folks that use those rooms are virtually the same members. So we've included an additional amount of chairs up to 225 now, and you'll see a $6,000 increase to $18,000 for a chair purchase. There is only 2 changes in the golf area. Discussions were about patio furniture previously. Pat O'Hara recognized that Stardust did not need any patio furniture replaced due to it being replaced recently. But due to the expansion project that is coming up in the next few months from myself at Desert Trails, that patio is increasing in size, and new patio furniture will have to be ordered in extra. So an additional $10,000 was added there. No changes to allowances, and that would be the end of my report.
Could I ask you a question, Carl? Because we're going to open this up to the committee. Is the lawn bowling, are they pleased with your comments about the benches? One of the concerns I have there is they have purchased some chairs that even they feel aren't satisfactory, and we'd want to try to give them enough seating that they could avoid using that.
Their decision to have chairs in their building space for their use has nothing to do with benches that I'm aware of. I don't know exactly what they used those chairs for, but once it was recognized that they did have some chairs that they used for other reasons, they had to make a purchase because the chairs they had were inadequate for commercial use, unsafe. Nothing had come from that, but we made a recommendation that maybe you need to get rid of your little plastic chairs and get some better ones. Has nothing to do with the lawn bench conversation.
Thank you. I think we're going to open this up to the committee because this is a perfect opportunity for us to make our observations. Some of us have actually gone out and physically toured these areas and have looked at them, so it kind of gives us a better perspective. And Christine, I'll start with you because I know that you've...
Sorry, Mr. Bosacco. Carl, thank you again for the monthly rundown of the changes. It's really helpful to see those changes, and I really appreciate that. Going to the tennis facility renovation, this may be a question more for the Properties Committee. If so, please inform us. Under the facility renovation line item, the study amount that's there, one of the questions I have was whether or not the facility, it's not, the facility when I toured it clearly needs renovation. Right? But the usage of the space was my question. So would the study also include a potential repurposing of that space? We've had some owner members make some really interesting suggestions about alternative or additional uses for the space. So would that study include that, or is it strictly the $50,000 would be to renovate and replace it as a tennis facility?
Yeah, this has been an operational decision to help support the community for multiple requests. I mean, we know that we have some users that love Kuntz for tennis use, and we're not here to chase them away. We know that there's a very low level of play at Kuntz due to the conditions of the whole entire facility. And then from a perspective of the design request here is, again, to renovate that whole area with the original discussion is and has stayed the course is 2 tennis areas.
Okay.
A third tennis court that could be converted or changed at any given time to another tennis or multiple pickleball. And then 3 tennis court sizes, which convert to conveniently 9 or 12 pickleball. This is not a study. So this is an operational decision that has been discussed, and I've been mandated to put in funds so that I can get design and architectural information.
So the other questions I had, I will defer to the Properties Committee on that one. The only other question I had, if I may, Mr. Chair, is on the Activity Center restroom partitions line. You mentioned that it's to secure paper products, and I know you've told a few of us anecdotally. Could you just expound on what does that mean? Sure. I think we have some losses in that area, right?
We have partitions that are original, and they have built-in toilet paper holders and other bathroom paper holding devices. You might find this shocking, but on an average day, we could lose anywhere from 1 to 13 rolls of toilet paper being stolen. So the partition came with the paper holders being built into the partitions. They can't be removed and modified. And we've tried the cheap little locking device of just a squeezy toilet paper holder. They just get broken out, and the toilet paper still is stolen on a daily basis. So the idea is just let's get rid of these partitions and get our waxy product or future Hilliard, whatever product line for cleaning products that we use, that we have partitions that can change with the times and our products can stay secure. And it involves, unfortunately, all the men's and women's bathrooms in the 2 buildings. So theft is the motivating factor for having to replace these partitions.
McDonald.
You didn't think I'd be silent about this, did you, Dick? Everybody take a deep breath. Be patient. What would it cost to rent a backhoe for a day? And this is obviously a very small tractor backhoe. What would it cost to rent it for the day?
I would have to provide you that information.
We're requesting to buy a new piece of equipment. How have we managed to live without it all these years?
We have an asset on our books that would be replaced. We have a backhoe that this is replacing.
So why is it in the new list?
The difference between the asset is currently in the Environmental Services Department and currently being proposed to be in the Facilities Maintenance Department.
So it's not a replacement of an existing backhoe, it's a new one, which brings me back to the question, we've managed to live with it all these years. Couldn't we just rent one by the day? We can get one at Home Depot, or if we want to support a local business, there's a little yard that has rental equipment right down there on Dysart. And so, I mean, how frequently is this backhoe going to be used, considering we haven't needed it for 40 years?
Basically, it's trading hands of the primary users, but Todd uses it all the time, and we virtually don't, in facilities maintenance, don't have access to it as often as we would need it. So Todd's is aging out, and basically the asset is just being located from one department to another. I'm sure that if facilities maintenance only had a few rentals, then your point on rental costs would probably be below. But it also involves the time of picking it up, the equipment needed to get it, and facilities maintenance operates under more of an emergency plan, if you will. So that's the benefit of having it in-house, ready to go. And like Todd's, few of his pieces of equipment that age out, we don't necessarily just discard them. They just don't have any book value left, I think would be the right term.
Okay.
Use it up until it's not running anymore, basically.
Okay. Next, I watched the board workshop on Friday and listened to the presentation about the library. At the moment, I question why we would allocate $100,000 to have plans drawn up for a project we simply can't afford for perhaps 10 to 15 years. We have millions and millions of dollars needed on our golf courses, which are the second largest generator of revenue to the community. The library, it's good, a lot of goodwill, but it really doesn't generate much in the revenue. And so why would we think about allocating money for have plans to be drawn up when we probably can't approach this project for many, many years, if at all? And so I'd like to see that come out. As far as the Kuntz tennis facility, I've gone to it, I've looked at it. I don't see that there's anything wrong with it, except for the fact that it's used so very little that there's not even a monitor. There's simply a sign-in sheet. I've gone by it at numerous times during the course of the day, and the facility sits empty. And, you know, it's all well and good that we want to add more pickleball courts, but I go by the pickleball courts from time to time, and sometimes they are truly busy, then virtually every court is used. But for the most part, there always seems to be excess capacity. The next item I would want to bring up, the softball fence. I think it's wonderful that you found another vendor, considering the other vendor, I think you said, went out of business, and so we couldn't rely on their number, but magically we've got another vendor that's coming in at $260,000 and change less. Have we only talked to one fence vendor about this project? Have we not gotten out and gotten 3 bids?
At the time, when I was working with General Acrylics and Adam Fence, Western Fence didn't provide me a document. They provided me the verbal that the pricing was virtually the same. Western Fence doesn't focus on ball field style fencing. It is different than your traditional, I don't know, property, whether it's commercial or residential, 4, 6, 8 foot tall fence. It's a different level of conversation. Whether Western Fence was the wrong person to talk to at the time, they were willing to entertain it, and they gave a price that was the same as Adams Fence. Now, again, there's not a lot to choose from in the valley as far as fence providers go. And at the time, there was no Biddle and Brown that was ever brought to my attention, nor did I see in my contractors lists when I looked through items like Blue Book, online, things like that. So happy that they've come to the table, and this is a great reduction in price.
So if I understood you correctly, right now we only have a price from one vendor.
That is correct.
And we live in a metropolitan area that's the 4th or 5th, maybe 6th largest in the country. And there's no other vendor in this metropolitan area or in the state of Arizona that can build this fence?
Please remember, this is not a go out to bid scenario. This is a budget timeframe. So finding the best resource, not every project line on here gets 3 vendors. When it comes time to approval and we go out to bid, you will know whether you end up in a category of savings or if you're going to have vendors that are higher than this. So, there's 40 other line items of doing homework on this list, and one fence company, I don't think I haven't done my due diligence in finding the right vendor. I'm sorry that doesn't please you.
Well, it has nothing to do with pleasing me. I'm here to make sure that our money is spent wisely. I just find it hard to believe that on a project of this size, we haven't at least talked to a couple of other companies to get an idea. We've already seen we dropped $260,000 off the price. Maybe there's another $50,000 or $60,000 to come off.
Very good.
We can move on. As far as Silvercraft, I've gone in, I've walked through that room. I've looked at the floor, I've looked at the ceiling, I've looked at the existing cabinetry. Frankly speaking, I don't see anything wrong with it. Further down the line, the pool decks that are going to be replaced, Palm Ridge, the indoor deck, are they going to put the rubber decking down on it?
That is correct.
As far as the rubber decking, how is it doing at R.H. Johnson? I've heard people say that the darker brown color has lost its richness and seems to have a white sheen on it. What are your thoughts about that, please?
So the rubber is performing just as good as it is at Kuntz, which we think is good. This is the first season that a seal coat for cleanliness purposes was available to us that did not exist when we did Kuntz. So we went that route and put a seal coat on in hopes of keeping it cleaner. It is performing to that standard, but what it's also doing is showing the calcium chloride that we use for the pool chlorine, and that is the white film that you are getting on top. And it is very evident. It has put a white film across the surface, but the surface is clean.
But it doesn't look like it was new just a few months ago. So we're into this product for 6 months, and already it's not as attractive as it looked when it was new. It's all well and good that it continues to perform as it's a rubber deck. I mean, you walk on it.
So now that I've explained it to you, is your recommendation that maybe I shouldn't put the seal coat on the next product? Because that's the answer.
I don't know what the recommendation could be.
Our recommendation is to continue with the product. It's safer. It has the highest amount of slip resistance. You saw what 7 years of use on the cool deck or acrylic surfaces that pool had previous. Go look at our other pool decks. They all have discoloring. The other fact of the matter on this product is we did originally hope to get maybe 15 years. We have had discussions that we are making its useful life less than what we originally expected. We don't believe that any product that's available on this market is going to give us such a dramatic result change that it's worth to stick with like a concrete surface. The rubber is still probably the best that we can do for our pool decks.
I actually like the rubber.
Good.
But what concerns me is maybe going with darker colors, like Johnson Pool has that dark brown color, and it's mostly obscured now by that white film. Perhaps whereas the lighter colored deck at the Johnson Pool looks fairly good, looks almost like the original color. So perhaps going with a lighter color that won't be as tainted by the white film would be the right answer.
So compare it to Kuntz in making best decisions. It's a white, gray, black mix. It is much lighter than R.H. Johnson. it does show a traffic pattern a little stronger than Johnson. It does not have a seal coat on it. So again, our choice is to, the milky color is just a byproduct of the fact that we have to have chlorine in our pools, and it's staying on top of this nice seal treatment. So next pool, we can change it up and see, but I don't think color is going to change it. Meaning, unless we stay with a whiter, even the light tan at R.H. Johnson Pool still shows the film. The blue boundary edge shows the light film. And my opinion is, the pool still looks great, but yes, there's a sheen of white across the top.
Last item. I've sat on the furniture of every golf course in this community multiple times. I see nothing wrong with the furniture, much less do I believe that there's $10,000 worth of furniture on those patios. I question why we're allocating the money to replace the furniture when the furniture looks perfectly okay to me, and I'm glad they took Stardust out because that is, in fact, brand new furniture. So I'm not certain why we're looking to replace furniture on the golf course patios when it looks fine, and it seems to be working just fine.
I'll have to defer to Pat O'Hara on providing that information back to the committee, or go to the golf committee and ask the question again. They'll have the same opportunity to look at this list.
All right. Thank you, Carl.
Thank you.
Lynn?
First off, I want to mention I also went out and looked at a few of the properties, and my question is regarding Kuntz tennis courts. I've been there several times, and of all the times I've been there, there was one person using it with the ball machine. And it just seems like that's a big piece of real estate to sit there and not be used. Maybe the option, as you're saying, pickleball courts might be the way to go. Were you saying that the money that you're asking for that project is just for research to what we can do with it?
No, it is to take the operational plan and get plans and documents so that in FY 25-26, we can come back to the table with costing to actually renovate that per the discussions that I've shared with you.
Okay, and at this point, we don't know if we want pickleball courts in place of part of it or not.
Operationally, we do. We do know that the community has asked in multiple avenues, whether it's by pickleball club asking for it in specific areas, community members asking for additional pickleball, regardless of where it's at.
Okay.
This is a facility that is just sitting empty. It doesn't get played because it's not desirable. There are a couple of folks that go just because that's their place and they're playing on, what would you rather play on, Kuntz or the R.H. Johnson facility that's been fully renovated?
Yeah.
You can see their passion in it, but there's a little point to this, build it and they will come. The community has asked for pickleball. This is not based on a pickleball club discussion. This is a discussion internally with staff to renovate a facility that's not being used correctly.
Thank you. The other item I wanted to talk about is, it's more of a comment than there is one question. I did take a pretty good look at indoor and outdoor pools at Palm Ridge. Outdoors, as you know, it's a mess. That concrete's a mess. It's breaking up all over and at every entry of the pool and the hot tub and all of that. So definitely, if you're seeing better wear in the rubberized, I think that's great, because what's there today is pretty poor. And I'm just wondering, with the inside pools, is that decking that's there today similar to what will be put down? And the reason I question that is it looks like there's some deeper damage there, like it's really soaked in. I'm just wondering if that's going to be a better quality or sealed well enough, or will you have to put the sealer on that as well?
The sealant is entirely optional. So the sealant decision was made based on the traffic pattern that we physically saw at Kuntz, the darkness of people's foot traffic from not bathing, from wearing their shoes, from the parking lot right into the pool. We have equipment that cleans that deck and keeps ahead of it as best we can. The seal coat came around, the vendor was proud to be able to give us this option because we discussed it over the last few years of observing coons. So it wasn't terribly expensive, so we tried it. Now we see the effects that our chemicals do by not being able to kind of fall through and wash out.
I guess I'm not questioning why. I think it sounds like a good option. You just happen to see what happens when it goes on a dark surface. But in looking at the Palm Ridge indoor pool, what type of resurface will that be?
Oh, same rubber product, both
Okay.
indoor and outdoor.
And that is different than what is there today?
Correct. Inside the Palm Ridge pool, we basically have epoxy chip coat.
Okay.
A surface in there, and the discoloration is due to that natatorium environment of the chemicals of the pool and the atmosphere, making the epoxy yellow, you know, so, and then the other benefit is the rubber covers all the control joints, and you can see that there's thousands of control joints at the indoor pool, and that was due to the drain system that had to be installed a few years back. So the rubber allows for the control joint to still do its thing without making the rubber break.
Great, thank you. And one last item, also at the ball field, I was kind of surprised to see that there was as much wear going on that fence as there is. My first thought was, well, maybe we can just resheet it with a new cyclone. Well, then you get behind it and it's very cobbled together. I would be interested in seeing if we couldn't get that price down, but did you say $300,000 of that was going to be due to the cranes and basically taking things apart?
Biddle and Brown's quote is in the mid 300s. I don't want to give away the knowledge, but okay. So in the mid 300s, and the rest of the factor that you see here is the unknown portion of what taking the AstroTurf back. And in the warning track area. So if it comes out nicely, that cost will be low. If it does not come out well, then there's a component that we might have to replace that AstroTurf if that was the effect of having to put the new fence up.
Perfect, thank you.
So before we go any farther, I want to, I think we need to make a slight modification to our agenda. I don't think we're going to have the time in this meeting to go through and actually make vote or to recommend which projects are going to come off. So if we could today, if we could focus our questions for Carl as we've been doing, and then we'll move this to the November 21st agenda where we'll actually go and select the items line item by line. Okay, so that'll give us some perspective of where we want to go with it today. So Mr. Bosak?
Carl, we may have talked about this last meeting, but the Echo Mesa irrigation system, does the $5 million number include turf reduction as well as the cost for the irrigation system? And I know you've learned from what we did at Grandview, correct me if I'm wrong, $5 million for the project and $2 million for the turf. You're going to take out less turf at Echo. But is that a firm, hard number now based on your experience?
Hi, good morning. Just give you a quick update on the Echo Mesa project, irrigation and turf reduction. We're currently in phase one, which we had a budget of $205,000, and that includes the design work for both irrigation and turf removal, staking, GPS mapping, and engineering cost. All turf lines have been marked as of today. We're looking at taking out about 13.5 acres total over at Echo Mesa versus the 45 that we did over at Grandview. So we have that identified. Now, phase two, the main portion of the project, our proposed budget is $5 million. We do have an increase of $700,000 from $4.3 million that we originally had in a reserve study. So this is due to a 12% increase in irrigation materials or hard goods like the heads, valves, pipes, and all the wiring from Rainbird. Rock material has increased due to the need for larger rock over there at Echo Mesa because some of the slope just to hold it in place and out of play areas. Increased cost and required county permits is also one that went up from the Grandview project. And then connection to the transfer line, which we did not have over at Grandview, which is a very important part of the entire system for all 7 golf courses. So the actual project is, we're about a year and a half out from breaking ground over there at Echo Mesa on the project. We should have some hard numbers within the next 6 to 8 months. We've been working on those every week, so we're getting closer. Project does not include the new turf that was mentioned in the USGA report. We put that out there. We thought that that would be a good time to maybe install that turf, since you have the golf course closed and you're tearing it up for the irrigation and taking turf out. So that would be, but honestly, we have a lot of research to do on that. I'm not sold on it completely. We'd like to go out, and there are some golf courses in the area that have that currently. I think Sun City, and then there's a few over in Scottsdale that are currently using that. In the beginning, they talked about saving 30% water if you go with this sod. Now they're down to 10%. So I think we have to do a lot of research and see if this is really a turf for us. But if we find out it is, maybe we can, maybe that's something we can put in over there at Echo Mesa when we're closed for that time period. So still a lot of work to do on that. But that $7 million or that $5 million does not include the sod. That's just strictly irrigation and turf removal, just like what we had over at Grandview.
What would you anticipate that number to be?
If I was to guess, I'd say maybe 20,000 an acre. Because you have to have preparation for that, and removal, and also installing either sod or sprigs or stolons to get that.
So 260,000?
Yeah.
Okay.
Yeah.
Thanks.
You're welcome.
Carl, I'm going to ask you about something I know nothing about because I'm allergic to exercise equipment. But the cardio equipment.
Me too.
Rock on. I don't have a golf game. Cardio equipment in the strength condition, does that come from the same vendor?
Cardio,
The two items you've got separated, but they come from the same vendor?
almost the same vendors. There's more opportunity in the cardio side for going out for bid, and we did receive 3 competitive bids there due to the technicalities of that equipment, because a lot of it is pending on warranties. So it's a little juggle. They're all great equipment. Who gives the best warranty and service after? So we had to see what everybody's prices were to make a best decision there. I learned that due to the purchase cycle of the Beardsley that's coming up this season. So
Yeah, that was going to be my question.
on the strength equipment, we have a different range of some of the manufacturers for the cardio sell the strength, but some don't. So couple different vendors there.
Yeah, I was thinking that's a pretty competitive industry right now.
Competitive.
So I'm glad to hear you got the three quotes. Last point, I just want to reiterate the point I made at the governing board meeting last week about the library expansion. And the more I thought about it, the more enthused I got about it, actually. But being a 501c3, anybody who still deducts, itemize their deductions, if we found 1,000 people in Sun City West to come up with $5,000 a piece, that's $5 million to pay for the library. So I talked to Katie, I talked to Tracy after the meeting, and offered any kind of help that they would think about putting together. For those of you that didn't hear that meeting, I checked with R.H. Johnson. He really doesn't care if his name stays on the building. Someone else could pay a few dollars to get their name on that building. We got people that were willing to pay money to have their names on a room within the library. We've got a donators wall that would highlight someone's worthiness in contributing to that project. But there's a lot of things we can do that might knock that number down. So I don't quarrel with the 100,000 if it's spent determining the scope of what needs to be done, because that should give us a better idea if in fact somebody wants to get involved in putting a donation campaign together.
And this project deserves all these committees' attention this whole year. So, the interest, you saw the concept, talk it up, positive or negative. We need impact. We need input. So we need that advice from you for moving forward. I mean, it's one thing to put down $100,000 to go get plans and documents, but I don't just nilly-willy spend it. So, let's have this discussion all year to know that we're moving forward with that decision, so.
My point would be that if in fact there's a reality here, and maybe this is just me being crazy, but if this kind of campaign could ever come to fruition, you're going to have one hell of a presentation to get people to buy into it, to even be willing to donate. So if this is part of what it would take to get people to dip into their pockets, so be it. And at the same time, we need to verify that people, especially the Friends of the Library, have included the library in their estate planning. So we got a lot of opportunities to take a hunk out of what the expense would normally be.
Mr. Miller?
Lizard Acres. Okay, I continue to, and literally last week was the first time since Lizard Acres opened that I was actually in there, and I was in there for the torch class. Nice place. I continued to hear residents make comments, and this really isn't something that maybe you can answer. I continue to hear residents make comments that they can't get in because too many people from the outside are there. Okay? I also have a concern about the fact that, in essence, Sun City West has chosen to run a bar, as opposed to sending that out to someplace like Mimo's or the Crooked Putter, where we have a vendor doing that. And I have that concern from a liability perspective. People go to a bar to drink. When people overdrink, they have the potential to get in accidents. So, maybe this is a question Bill could address if he wants to. But really and truly, have we thought about taking this where we turn it over to a vendor as opposed to us directly running the thing? That puts a layer of liability protection back and forth between us and the public.
I think we're veering off here a little bit. As much as I would like to hear Mr. Swin's comments on that, I don't.
Okay,
because,
well then, given that, Dick, then I have a problem with spending that money.
Yeah, that's where we're looking. Okay, thank you. Davis?
I have taken the tours and looked at many of the facilities you talked about, but I don't have any new questions asked that haven't already been asked, and so I will just move the time forward.
Hey, Dick, I've got a question.
Yes,
Dwayne
thank you, Dwayne. Yep.
Yeah, I hate to belabor the softball fence, but I just want to clarify, is the fence currently at its end of life, or is it just a request from the softball club to raise it higher? And then the second question I have concerns the Beardsley Rec Center floor replacement in the fitness center. The reason for that, I frequent that and it looks pretty good to me, and just wondered what Carl's thoughts on why that's being replaced.
Very good questions. Both are based off of 100% useful life. So the outfield fence has met its full asset value of useful life and actually exceeded that. Same with the flooring in Beardsley. In the original month's documents, you saw that I had like a deferral list below the components of this presentation today, where we've made decisions on deferral. The lecture hall that I'm standing in here right now was actually a carpet that's due for this year, and we made a decision that this carpet's in really good condition. All the folks that walked Beardsley's fitness room said that, no, we would like to see that useful life replaced. And if you take a real deep look, it does have its rubber fraying edges, and I'm not saying it's a rubber floor, it's going to last a while if we held on to it, but facilities maintenance does do a lot of gluing to keep it down. So it has met its useful life, and that's why it's up for replacement this year. Same with the fence. Has met its useful life. Properties committee did do the tour, and it was evident that two major posts at halfway up in the very far first baseline side, we do have two broken posts. That was not evident at any conversation that we've ever had. We never noticed it, but when we all eyes on deck. I believe Christine was with us that day. A few members of B&F were with us. And we had 2 posts that are actually sheared due to the pressure of the trees and the netting, wind. So I'm going to say that, it's not falling down, and we will be doing our repairs to those posts regardless of this conversation, but it has met its useful life. Thank you.
Okay, I think that completes our committee discussion here. Is there anyone in the room that has a comment they wish to make?
My name's David Bennett, rec card number 137887. Just clarification on the increase to the library study from 70,000 to 100,000. Has the vendor already been picked, or was this a discussion by several vendors saying that we need more money? If this is a vendor that says, I want a 42% increase, is that going to be put out to bid again?
Staff went out for a request for information to find designers / architects that are proficient in previous library remodeling, additions, building of libraries, and there wasn't a great outpouring. There's architects, and then one of the RFIs was answered by an architect designer team that have had multiple libraries in their resume. So we paid them a fee to provide us a concept and give us a range of magnitude price. Based on that information that they provided us, that's the information we provided the governing board the other day in the concept deliverables. And based on seeing what architectural costs or percentages against a project valuation of $4.5 to $6 million, if I'm going to do any work moving this forward into next year, then we saw that we needed to probably bolster that with the additional $30,000.
And so that was based on what this vendor says it will cost?
The Durkin architectural and design team, yes, they definitely provided all of the information that we were hoping for from our request for information.
They're the only ones that you have inquired about a price?
That's typical to how concept ideas start. You start with one, you get the best information so that this committee and the governing board can make decisions, and then from there, in the future, we will go out to others to find the most competitive project planning costs.
Just a history, we were designing a building and we were getting prices, architectural things, they provided one, and then afterwards they wanted even more money, and so that was a more simple building, wasn't a library, but they were the low bidder, and I've seen this before in projects. You get a low bidder, and then they submit change orders all the time, or requesting more and more money. And I didn't know if this was the case, or if you had another competitive bid, and go back to them to see if they need another $30,000 over a $70,000 initial bid.
That will happen in the next phases of the project planning process, year 2, year 3, year 4, depending on where the...
But then you're talking about other concept. Are you still talking about architectural plan changes? Now you're talking about building things, and that's completely different.
Thank you. Thank you very much. Okay. Mr. Elias? Or no? Schaefer?
Good morning. My name is Coke Schaefer. I'm the president of the Pickleball Club. The Pickleball Board has discussed the 24-25 budget in regards to the $50,000 expenditure for the study of Coons Courts. On behalf of the Pickleball Club, as its president and homeowner, I feel this proposal is a waste of our homeowners' funds. Here are some of our reasons. Coons Courts are a concrete box with high perimeter walls that is set below grade. The temperature is very hot in the facility due to the dark playing surface and the dark walls that radiate the sun's heat. One would think with the high interior walls that wind would be mitigated. This is not the case because the exterior wall is about 4 feet above grade, and as the wind hits it, the turbulent air is compressed and goes down into the courts and swirls around because it can't get out of the box. There's not ample parking in the area for the number of proposed pickleball courts. 12 courts, that's 4 people on a court, that's 48 people. Plus, you'll probably need 50 more parking spots. More tennis courts? Are the R.H. Johnson courts all or near capacity so that the community needs more tennis courts? We think not. Bottom line, the Kuntz courts are an albatross. This piece of valuable land needs to be repurposed. Sinking money into it is a mistake and a waste of our valuable resources. Yes, this community needs pickleball courts very soon, but the Kuntz courts is not the place to put them. Thank you.
Thank you.
Good morning, Bruce Lees, 135422. To the chairman of the committee members, and to also members present. I had 3 questions respectively regarding the softball fence, and I was hoping to get a clarification or some responses. Are we tying the cost of the fence replacement vendor to include the subcontractors working with a turf vendor to perform the work to allow access to dismantle and replace the outfield fence? In other words, are we trying to roll it into one bid?
Carl,
No,
if you-
actually, I would try to do the best that I can for the community. And if I could go into a contract with a fencing contractor for the fence, and then go into a contract with General Acrylics, who provides us the warranty for the turf, then that's the route that I believe would be the most economical for the community.
Thank you. The next question, are we soliciting a specific material being requested in the bid, whether it be galvanized, zinc-coated, mesh, and various components?
No, basic chain link fence is what exists. It's what's put up with. There is a weight to the metal described in my document, but it's typical. The most important specificity of it is the increased size of the posts that need to support the fence for the future, and the additional last 6 feet of netting.
Correct, yeah, because I understand the request was for 30 feet, so I understand that they have to have higher tensile strength posts and supports. Correct, thank you. And then, are we able to solicit vendors from out of the immediate area or state as we did? I understand that the pool renovation or the pool resurfacing for Johnson basically was a single vendor thing, and those folks were out of Texas. But do we still have the flexibility to go outside of the area to locate a fence vendor? I'm still concerned that even with the reduction, $500,000 allocation for a fence that's 400 feet long and 30 feet tall is still exorbitantly expensive. Thank you very much.
And the answer is yes. So all considerations will be taken. Even to answer Mr. Bignato's question for earlier, I think about these things, and again, with the resources of time of getting, 34, 35, 40 items all dialed in, I hear the resounding question, yes, we will go out for multiple bids and get the best price we can for that project if it gets approved.
Thank you. Thank you very much. Do we have any questions from online, Christine?
We do. Several questions from one member, so I'm going to read them together, or you can tell us, Mr. Chairman, whether we should answer them separately. So this is, all questions are from Director Jack Leary, 128260. What does Carl mean by securing our paper products? I believe that's been addressed. Number 2, regarding the Coons tennis courts, are all of our other tennis courts used to capacity, making it necessary to renovate the Coons courts to accommodate displaced players?
I think that's a fair question. Carl?
The operational discussions about the tennis at Kuntz is based on a little bit of an understanding from previous investigations on it. And just to clarify, these funds are not for a study. So these funds are for direct architectural and engineering opportunities based on what I mentioned about a couple of tennis, basically a full renovation of post-tension slabs throughout that area. The architectural approach will be what impacts by renovating, 3 of the courts to 12 pickleball, does it have on parking? That'll come in the next year's session when all of this information is collected. So it is very possible that we don't need tennis, other than the fact that I know there's a couple people that'll be in here saying those are my favorite courts. It's just a bit of an honoring of both sides of the discussion for who we know our users are. So should it all be pickleball? We heard today, I've worked closely with Coke before. I have great respect for her and her pickleball club. We work closely together. Being down in the pit, I've heard plenty of conversations where pickleball should take over some of the R.H. Johnson tennis pickleball courts. That's in a pit. It has the same wind load. We have no other land to place pickleball at. We've done a study at Palm Ridge for 18 courts. The people will complain about the noise. It takes up a parking lot. So this facility is a sports facility for the purpose of racket sports, and the general manager and staff have found that the renovation of this is probably the best idea so that we can help the community have more pickleball.
Okay, thank you. Do we have one more? Okay.
Yes, he had one more. It's a question, and you may have addressed, this may have been addressed, Mr. Chairman. Pickleball at Kuntz, are the pickleball courts being used all day, all the time, or is the issue of lack of courts at preferred times?
I think that question was answered in the equitability issue.
The same member, Jack Leary, 128260, wants a clarification on the Kuntz tennis courts renovation. Regarding the Kuntz tennis courts renovation, the answer, this is a question, although it's phrased as a statement. The question is no, there are no displaced players.
I'm not sure what the question is, but I can tell you, I can reaffirm that the money that is proposed is to actually proceed, or at least get plans to proceed with the plans that has been proposed by management.
That is correct.
So it's not we're not looking at disparities or anything. It's just, this is what it's going to take to move forward. Okay.
Just a clarification before we move on from myself. There are no other questions from our members online. You made a mention about a change in our agenda for today. Dick, could you clarify what this committee will be doing at our next meeting?
Yeah, that was actually going to be my next comments. In the interest of time, our responsibility here is the B&F's responsibility here is to go through this by line item and make a recommendation or a consensus on if we support or if we want to recommend that we remove that particular item from the proposal. We really don't have the time today to go into that. So what I want to do is to move the remaining part of this discussion, and that's the part that for the committee action, to the November 21st meeting. That the agenda so far at that meeting is not heavy, so I think we can move it to that and safely have the time to deal with it. So.
And if I may, the recommendations from all committees will be provided to the governing board at the general meeting at the end of this month. And somewhat regardless of what the committee's recommendations are, if there's consensus by the governing board directors to remove an item, then an item will be removed. Otherwise, the list goes to the general manager, and we have the next 4 months in the 50,000 and greater, and then another review of 100,000 and greater, just so everybody knows it doesn't stop right here in November.
So we really do have time to move on this. So, already. Yeah, Gary?
So I'm thinking that we haven't reached resolution. I assume you're speaking for your 1,400 or 1,700 pickleball members when you made the comments that you did. And I know you've said you work with her closely, so she's saying don't spend the money, which I think history has been made, because pickleball has been pretty good at expressing their wants, but I appreciate your honesty and willingness to step forward. And you've offered your side, so where is it going to be?
This will be in your hands. This will be in the properties committee discussion. This will be in, charter
Okay.
clubs, so.
All right.
Yeah, I think the part that we want to capture for next meeting is, and it sounds like it's probably going to be too late, because the meeting is on the 16th of November for the governing board. Is that when when this will be presented to them? Because the B&F meeting is not till the 21st.
Your recommendation from this meeting today is supposed to be given to the governing board for the next general meeting. December 1st is the policy deadline for receiving the proposed capital list.
Okay, so are we in a position in the committee now to start making recommendations on the expenses here that they're proposing? Well, for anything that's on here, because if we want to get something to forward to the governing board, we have to do it right now. Yeah, let's take a 5-minute bio break. purpose of our reconvening here is to try to come to closure on the action that we're going to take on the capital assets. One of the things that I want to point out is that we're really working on kind of a soft deadline. You know, the deadline is that if we can get something to the governing board and on to the general manager so they can consider it, including it or not including it in the overall budget. We will have ample time in the next few months, probably the next three, at least the next 3, if not 4 months, to have to review this. We want to make a deliberative review. We want to have time to review it, to think about it, and to make sure that we're making what we feel is the right decision. So that's what concerns me a little bit about today, reconvening and trying to rush through something. So what I'm going to propose that we do is that we go through the committee once, and if you can identify things that you absolutely feel strongly about, then I think we can try to work with that list and then move something forward to the governing board. That will give us some type of a deliverable that we can move on to the governing board, and we will have done thoughtful consideration. So at that, I'm going to start with Lynn. Do you have 1 or 2 things or 3 or whatever that you're just adamantly certain about?
Yeah, I probably do. I really think that the pools at Palm Ridge need to be done.
The what?
Pools, swimming pools, the decking, especially outdoor.
Mr. Rhodes, could you clarify the ask, please?
Yeah, I'm really looking for the exceptions. The exceptions. Thank you. You don't have any, that's okay, because we're still going to have another shot at this.
I really don't at this
Okay,
time.
Mr. Bosak?
Nothing.
Nothing.
Mr. Miller?
Nothing.
Novello?
I do. The renovation of the Coons Tennis Facility needs to be rethought. I believe we need a more expanded view of what is the best use of that facility. I don't know if we're ready to just go in and study about creating more tennis courts. So I'd like us to, my opinion, I'd like us to reconsider that line item to be inclusive of other options. I don't think after hearing all of the input from various sources, including the president of the pickleball court and other residents who have been writing to us for the past 3 months on this topic, I do think that we need to think a bit more broadly. That's one. Of the other items that are here, I have others that I may have some questions or quibbles about the amounts, but I think that they should remain in for budget consideration. That's the one big one for me, believe it or not.
Okay, so just to be clear, the $50,000 that has been proposed for that is something that you feel strongly that we should not, or we should remove?
We should remove that, yes. Oh, and the backhoe, although I understand that there's a need for that equipment, I'm unclear, unfortunately, Carl. I'm really not clear now on why is it a new one, is it a replacement? And so forth. So more information on that. Those are 2 things that I have question on. Thanks.
Do you feel that we should pull the $75,000?
Yes, at this point, yes.
Okay. Mr. Bagnato?
Clearly, I'm going to have more than 1 or 2, but I'll give you my 1 or 2 for the moment.
Okay.
As far as Lizard Acres, I will not attach my name to anything in this community that exposes the residents to a potential multi-million-dollar lawsuit from a patron being overserved. I believe that should be removed. I also believe that I'm probably the only person in the community that feels that way other than David. The second one that I think needs to be removed is any funds to be spent on the library expansion. This isn't even an item that's funded in the reserve study. In other words, the $100,000 is just to draw up plans. We still have to find the money to build the thing, and an estimate of $4.5 to $6 million is now, and that's a heck of a lot of money. I believe we shouldn't spend a dime on library expansion until how to pay for it is fixed.
Thank you. I do have in my list, I'm very nervous about the softball fence, even the $495,000, although I did start to reconsider when Carl was talking about the erosion of the fence. So if there is an erosion of that fence where it's becoming unsafe, then I believe that shouldn't even be on here. It should be an issue that we'd want to address immediately and repair that. You said there were 2 posts. The other issue is $375,000 plus another roughly $50,000 for Silvercraft. That's a lot of money. And Silvercraft, that's a major renovation. And was it Frank that said that you had actually been in there and reviewed it, and I've seen it as well. If we're push comes to shove, I don't think I'm ready to remove that, to recommend removal on it. I would want to have other conversations. I share the concern about the library, with the exception, it's totally different than the Kuntz Center. I think the Kuntz Center should be pulled out. I agree with Christine on that. We know the pickleball club doesn't support it. I don't know if the tennis club supports it at all, but I think that there's an impasse on that. And Coke described that as an albatross, and I'm kind of believing that. But I would recommend removing the 50,000 for the. So what we have left on the table.
Hey, Dick, this is Dwayne Parsons.
Oh, Dwayne, thank you. I'm sorry, Dwayne.
No,
Yes.
you're fine.
Yeah.
You're fine. It's easy to forget when I'm not there. I got my 2 or 3 here. The library is one. The silver craft is the second, and then the patio furniture at the golf courses would be no's for me at this point if I was voting.
So you would be recommending that we do not fund the $100,000 at the library, that the silver craft, we not fund that. And then there's actually 3 projects that go in that silver craft. There's a ceiling, there's a floor, and I think they're about $25,000 a piece, if I remember. And then the other one for $375, I believe.
May I clarify?
Yes.
Yes, please do.
Just remember that the flooring and the ceiling are reserve asset tools, so we would promote that this be done regardless of a cabinet renovation. They're all reserve study items.
Okay.
But, you know, please go do your due diligence and walk that facility and make sure you listen to Properties Committee's recommendation.
Yeah, we would.
And it's the cabinetry that I have a problem with.
That's the $375.
Yeah. And then the patio furniture at the golf courses.
Okay, now we're going to go through this, and I've tried to make notes here, and I hope I've captured them. The one that has shown up a couple times is the library, the $100,000 planning on the library. It's for proposal. How do you feel about that one, Lynn?
The library?
Yeah. So if
I
you're,
would pull that off.
you would pull it off? Mr. Bosak?
Sorry to hit you with a curveball. I don't know why we're pulling any of these off if we get another look at this list in a month or 2.
That's right.
I mean, all that does is we need more information, or we need a different approach, or we need an alternative, and we've got plenty of time to do that. So why would we take these off now when we've got plenty of time to debate them in the next couple months?
I can't argue your logic. Ben?
I'm just wondering if, I agree completely with what Gary has said, I have so many questions about so many of these. Is it going to be this type of meeting where we actually discuss it, or should there be maybe a side meeting?
All of our
Right,
meetings are public.
I guess I'm talking more about a workshop, but I guess
Yeah.
this would
Yeah.
work the same.
I actually kind of agree that I think that this is a moot decision here, that we have other opportunities. And I think this generated some thought for us. We need to continue that and come up with, in future meetings, we'll be faced with a yes/no vote on it. So unless anyone objects, I think we're just move forward, and we won't have a recommendation for the governing board on this.
Well, although I'm not saying I object, I just have a suggestion or a recommendation. I don't know if recommendation is the right word, but we've jointly, as a committee, heard a lot. We've discussed a lot, and I scribed down 7. There might be more or less than that, but we have surfaced a few items that cause us concern. Dick, would you please represent that to the governing board in whatever way is, and just say, not necessarily to remove them, but we have a concern over these and we need more information, sort of Gary's suggestion.
We had a robust conversation, and Carl, as he always does, takes our comments, and I think he understands where our concerns might be, and we'll have another time for you to come back and either resolve those in our mind, or if not, then we'll have a chance to take them off.
Yeah, I don't have a problem doing that. As a matter of fact, that's very well is probably the best suggestion I've heard so far. We do need to have, we need to frame that in some type of a consensus. I don't want to have to do this after the meeting. I think that we need to have the committee hear this. So
I recommend that our chairman go to the governing board and express that we have discussed in detail where we are in November, and we have concerns over the following items.
I wouldn't either.
Okay.
Yeah. That we, yeah. I'm writing, so this is not dead time.
It's not a decision, it's a consensus, right?
It
so,
is.
And I respect everybody's opinions, and I wouldn't, a deliberate double negative, I would not disagree with anything that you guys have put forward in terms of having a question mark. If we were voting now to remove these items, I would have a concern. But I would have personally no problem representing these 7 items as, hey, as a group, we've surfaced as a starting point these items that need some further review. That's just my
Would you
opinion.
give me your list of 7? I don't have 7.
I don't know. I wrote down the just general areas. Softball fence.
Wait a minute. Tenant field.
Just tell this way we can make sure that I got them all. Softball fence, coon study, the backhoe, and that was just the sole on that one. Backhoe, Lizard Acres, the library study, Silvercraft, cabinetry, and the patio furniture replacement. Did I miss any?
Coons, backhoe, Lizard Acres, library study, Silvercraft, patio furniture, and the softball field.
Yeah.
Okay. We recommend that the chairman report to the governing board that we have concerns over multiple items, including the Kuntz facility, the backhoe and the trailer, Lizard Acres, library funding, Silvercraft, cabinetry, patio furniture, and the softball fence. Okay. Do we have consensus on that? Lynn, we'll start with you.
I know, you're always starting with Lynn.
Okay, then we're gonna start with Mr. Bignato.
Not to throw another wrench in the works, but at this juncture, since we're not voting or anything on any of these, why are we telling the board anything about it? I don't understand that.
Other than just to give them the confidence that we're working on this and we couldn't come to closure with it right away.
Then they should show up at the meetings, and then they'll know we're working on it.
Actually, as the chairman, I don't really have a problem with this. I think it's something that I could represent, and I think it's something that the governing board would at least have some interest in, that we have given it consideration.
And it sounds to me, I'm sorry to interrupt, and I'm totally out of order, but this is not just to assure people that we're doing our work, because we had several members of the governing board physically here and they're online, right? Because we can't all be in one place at one time. That violates open meetings law, okay? So they are watching and participating and so forth, even if they're not physically here. But what we've been asked to do by operations is we need a final list to go forward, right? That was what Carl was saying. So what we're trying to say is, hey, we're not sure about these, but we definitely have some concerns. And we're not going to take anything off, that's all.
Yeah, I'm fine with it, Dick. I say go ahead.
Okay, Christine?
Yes.
Right. Carl?
This is simply just a recommendation
Yes.
with your comments. You've made your comments. They're known, and that I'm moving this on to the governing board to be given to the general manager.
Thank you. So let's resume our roll call here. So, Mr. Davis?
I have no objection to doing so.
Okay, Mr. Miller?
I'm fine.
Mr. Bosak?
I thought you had agreed that we didn't need to itemize our concerns. We just said that we'd had a lot of input and we didn't need to try to detail those that we had concerns about, because in essence, then you're kind of setting the mind for them that they ought to have the same concerns.
So that's different than what we had proposed. We had proposed the 7. Okay.
New recommendations.
So here's the recommendation, that the chairman report to the governing board that we have concerns over multiple items. Period.
Sure.
Okay, now, no, we need to I want to make sure everybody understands that, and we need to get consensus from everyone on that. Okay? I will start with you, Lynn, this time.
Yes.
Mr. Bosak?
Yes.
Mr. Miller? Scene?
No?
Yes.
Okay,
Consensus.
it's a consensus.
And Dwayne?
And Dwayne, thank you, Dwayne.
I'm a
Dwayne?
yes.
Yes.
Dwayne Parsons is a yes.
Okay. 6-1. Okay. Okay, so be it. We have 2 items left, and we're going to go through them. Okay? Item 3.05 and 3.06, and they're, what? Okay, thank you.
We do have a member comment, and again, this is a comment from one of our governing board members, commented, because the recommendation needs to be done by the 1st of December. I'm reading what's been typed.
Okay. I acknowledge that.
And Dick, just so you know, Gary had to leave. He had a
I know.
prior.
You told me that. You told me that. Okay. Do we have any other comments on that? Thank you. Mr. Davis, 2 items, FA 3.05 and 3.06, disbursement authorization policy, and FI 20 is petty cash disbursement.
I have reviewed both of these policies. FI 11 disbursement authorization was revised November of 2020, and I recommend no change. And I can do the second FI 20 petty cash disbursements. I also reviewed that policy. That policy was revised in November of 2022, and I recommend no change.
Okay, so we're doing this collectively, both of them, both of the policies were reviewed, and we have no proposed changes. Does anybody have comment on either one of the policies? Do we have any comments online on either policy? Do we have anyone in the room that has comment on either policy? So we have consensus to move this forward to the governing board? General consensus? Okay, we'll accept that. All right. So I will ask for committee comments. Mr. Bagnato, we're going to start with you.
None.
Okay, Ms. Novello?
I'm chatty Cathy today. I just want to reiterate to all of us and to anybody who's made it this far into our meeting and listening, that all of us and on the committee as well as the governing board, our role is to recommend what, not how we're doing things, right? So when we're recommending specifics of what, when we're recommending policy, we're not making recommendations on how operations works. We're not doing a day-to-day review. We do not manage our investment managers directly, but we have a really great CFO and staff that manage this on a day-to-day basis for us. So we decide what the CFO and the team work directly, although we never said it out loud. They're working with CapTrust on a very regular basis, if not daily, certainly very frequently. And we monitor the compliance with the policy. I just wanted to reiterate that. Thank you.
Mr. Davis?
No comment.
Mr. Miller?
No comment.
No comment.
Okay, our next meeting, I'm sorry. Dwayne?
Dwayne Parsons has no comments.
Comments?
There was one member comment that came in regarding our budgets and so forth that I failed to read out, so I will read it. Also from Jack Leary, 128260. Why not do a study of current court use before spending money to renovate courts that may not be renovated?
Thank you. Our next Budget and Finance Committee meeting is actually on November the 21st. Okay, it will be here in the lecture hall. So at that, it is. Thank you. Any in-person comments? Okay. And no other comments online? Okay. So it is 11:50 and we're adjourned.